Welcome back, everyone. I hope we're all doing fine and well today. In this video, we're going to talk about the usual stuff, which we're going to start with my open positions, okay? And after that, we're going to talk about the economic data, okay? The micro data we have this week, macroeconomics data, which is going to be first off the economic calendar we have for this week. And afterwards, we're going to talk about the economic heat map for the United States for the top guys, maybe the first four. The US dollar, the Eurozone, the United Kingdom, and maybe Japan or Canadian dollar. We're going to talk about those things. All right, those four literally. And then we jump to this particular guy right here, economic surprise middle. And then we talk about the top setup that is being, given to us or suggested to us by the top trade setup right here on NAS100, which is very, very decent. I mean, almost all of this trade. Okay, to start with, I'm holding Dow Jones, which is right here, bullish score of 6. We also have USD JPY, which is bearish. I also have it as one of my trade recommendations, which I'll be sharing with us later moving forward. I'm also holding, which other one is right here, Nzdusd JPY. I'm still holding on this one. And literally, it's actually where I took all my trade. Well, seems like most of them have disappeared moving forward. We're going to talk about them moving forward, okay? And lastly, we're going to discuss the trade recommendation I have for us today, okay? And that's more like it. Without further ado, guys, let's start with the economic calendar that we have for this week. The reason why I do this weekly is because I'm a swing trader. Some of my trade runs for weeks, for days, So, and sometimes it kind of slip into a month or so. So that's more like it. But we have some very interesting data coming this week because on Tuesday we have the Reserve Bank of Australia interest rates coming in very hot. And you can see right here, the market is forecasted the Reserve Bank of Australia is planning to cut 25 basis points, okay, which is very decent, all right? And if they ends up cutting 25 basis points, we're likely not going to get a very, very heavy move in the market because this particular one has been priced in. But for sure, maybe a minute or two, maybe 30 minutes or an hour, we're going to get some very neat move on Australia, maybe something like Aussie dollar right here, which I personally love the momentum. It just doesn't look good enough for me to jump into a trade on it. But currently, I'm quite bullish on this one. If I can get a much deeper push to the downside right here, I might look into buying Aussie dollar to all the way to this particular high, the November 2024 high right here. It might be a very good one. But all these moves right here, everything that had happened here, it doesn't look very good to me. That's just my own personal opinion on Aussie dollar. And heading back to the economic calendar, on Wednesday, we're just going to talk about the top ones, okay? One that really, really matters. On Wednesday, we have official cash rates and Reserve Bank of New Zealand, the rate statement. Another rate statement, rate decision, which in New Zealand, they are planning not to cut rate at all. And that is more like a testament to the fact that New Zealand seems to be the only currency right here that is still very bullish, okay? Nzdusd is still 75% strong among the 8 top currencies in the market. All right, followed by Euro, which is still very strong as well. Euro is also 67% strong. Swiss is also 67% strong. And then we have dollar at 54% strong, which is quite strange to me in a way. But it is what it is because the last week we got some very positive data for the dollar. We have the manufacturing PMI, the service PMI came very strong. Also, we have the labor data coming last week, the NFP. We're going to talk about that when we jump into the economic heat map. All right. So let me not waste too much of time on that. So we have yen right here at 50% neutral. We have Aussie pretty weak, CAD is very weak, and then we have pound at 40% weak. This is more like the second week that we see pound below 50. Okay, last week it was around 50, 47. Okay, now we get it at 40% weak. So I'm not sure we have any data coming this week for pound. We have GDP month on month. Yes, this is also very interesting. Although we don't really have any forecast for it, so that might be a surprise data that everybody's might possibly shake the market or maybe shake the market, or maybe the analyst hasn't really come up with the data yet. Maybe by Tuesday or Monday, you're gonna get a forecast for them. But right now, there's no forecast. And then, yeah, on Thursday we have unemployment claim as usual, FOMC member Wallace speeches. Okay, we're gonna get some insight on what the Fed is planning to do moving forward because we have FOMC data. Okay, we have FOMC rate decision coming this month on the 30th. So we're going to get into all of that as time goes on. But we don't need to worry ourselves about that just yet until they probably cut rate, which is unlikely to happen. Okay, maybe they're going to cut rate this month, which is, again, unlikely to happen because the traders, analysts are forecasting September, October, and December, something around that time. Maybe if there's going to be 3 cuts this year, maybe it's going to be September, October, and December, or maybe September, November, and December, something like that. Or maybe it's going to be 2 times. It's going to be 50 basis points each because Trump is actually calling for 3% rate cut. It was at 1% before, then 2%, Then he said they should probably just cut everything off. I mean, maybe they can just cut 4%, 4% out of the interest rate. It's gonna be very crazy. But anyways, we're gonna get all of that moving forward. Okay, maybe they're gonna cut it, maybe they are not gonna do anything. I mean, it's gonna be a very nice show into this month. For me, I'm just enjoying the ride moving forward. Now let's talk about the US economic heat map right here. Okay, looking at the US economic heat map, you can see that the quarterly GDP is at negative 0.5%, which is awfully bad. We talked about this last week, but the latest data that come out since the last time we talked were this labor data right here and the manufacturing PMIs. You can see the the service PMI, excuse me. You can see the service PMI and the manufacturing PMI seems to be coming up gradually again, because we started this month with a very strong GDP around 2.1%, and then we have manufacturing PMI around 50.2, and then we have the service PMI around 53.1. I'm trying to recollect this from last year. I mean, what we started with this year, dollar was awfully strong when we started this year. Then Donald Trump got inaugurated, I think, in January 20th, and boom, 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 boom. Inflation was going down. As inflation was going down, the GDP was going down, manufacturing PMI was going down, service PMI was going down, economy was shrinking. The MAGA plan was for the economy to get boosted up. Okay, we want to bring all those jobs back to the United States. We want to increase the internal production, the internal service as well as get robust. You understand? And inflation is to go down when you produce locally, inflation is meant to go down. All right, and then we're going to impose so much tariff on all these countries that have been taking advantage of the United States, so they can come back to the table. You know the show, all right? That's all the MAGA campaign. But boom, 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 inflation was going down, the economy was shrinking, but somehow the labor data stay quite decent. Okay, which has been more like the only reason why we still have dollar at a very, very interesting move, okay, or mood, in my personal opinion, though. Okay, you don't have to take my word for it. Okay, so but right now it seems like the labor data is still very strong, because right here on the unemployment rate we have it's been cut down by negative 0.2%. Okay, reduced by 0.2%, meaning so many people actually got employed. The initial jobless claim also came up very decently. Okay, I mean it came down very decently by 7K. We have just job opening also started going up, meaning that there's less people getting fired or quitting their job, and there are more people getting hired, which is very good. We have non-farm payroll at 147, a very decent increase from what the market was forecasting. Okay, although we had a revised data from 133K all the way up to 144K, but at the same time the market still beat the revised version by more like 73K. But when you look at the previous, which is 133K, okay, we see that the market is everything still looks very good for the non-farm payroll. It is quite decent. The house price index also came quite decent. Okay, it's a little bit low compared to what the previous was, but it is still quite decent. And then the MBA mortgage also looks very decent. I mean, I don't really know much about all this housing price index and mortgage show, but they also look not very bad. All right. So overall, we have a very strong dollar. I mean, a reviving dollar. But on a technical perspective, I'm still going to come back to the economy. All right, just give me a minute. On the technical perspective, especially what we are looking right now on the chart, it's not looking super good for the dollar. Okay, it's not looking super good for the dollar because, like I said, since Donald Trump got inaugurated, which is, the US president, and by saying US, I mean the president of the people. That's what he ran on, MAGA campaign, Make America Great Again, which is meant to probably, it is a pro-US and also pro-US jobs, pro-US production, pro-US, manufacturing. But then I'm not really sure about his stand on the dollar. Maybe he wants a weak dollar. So, when you get a weaker dollar, when you get a weaker currency, you're going to get more partnership with other countries because they would like to buy your currency, they would like to make transact with you, and even just to come back to your country as well. Possibly that's what he's achieving right now. However, it is not looking good because then that will also give chance for people to dollarize. If your currency is as weak as yen, it's as weak as something like CAD, something like New Zealand, why would we now still go ahead and use the dollar for all our transactions when it is not as strong as we thought it's going to be? Okay, so it's still very dicey in a way, But let's just see how it goes, okay? Like I used to tell you, you just have to watch, you just have to wait. So for the third time in our lifetime, in the past 14 years, okay, we're seeing the US dollar coming back to this trend line. The first time we got it at this trend line is 2011. The second time was 2022. And right now in 2025, we're getting it back at this particular region. That is something we need to pay close attention to. Okay, and it's been there since last week. Now, what is the take? Okay, sentimentally, I would say that there is a possibility for people to start buying from here if they are technical guys. Okay, if you're a technical trader, you will likely want to be like, yeah, let me buy from the bottom. You might want to call this the bottom. Okay, but definitely I'm not going to be one of those guys. Okay, I'm just going to watch and wait for me to be sure that dollar is back to its glorious days. Okay, to its glorious days. If there's anything like that again in the market, okay, I would like to see the dollar finding its way back to this 100 region, okay? Something like this, all right? This will be the first place that dollar will gain my trust. Dollar strength will probably gain my trust, but it's going to be a partial trust in a way. And this particular place will be the second region where I would likely, probably give it my everything. When you give something your everything, yeah, this is when I would leave all my trust to the dollar because there's a high possibility of it getting back to the upside at this particular region. Anything below here, all right, anything below this box, right there, I am still going to be very cautious about buying the dollar and how I approach the dollar moving forward. Okay, don't forget, all of this is just pure market price action. What is happening in the market? There's no other way around it. And then I had a chunk load of fundamentals of, macroeconomics data to support my decision making in the market, so I don't go ahead and start running like an endless chicken in the market. So now taking a look at the European economic heat map or Eurozone economic heat map. Right, sometimes it's very tough to really understand what this is. Is it European Union or Eurozone? It's very weird. Right, I'm just going to call it what I'm going to call it. So far we understand that what matters. So right here we have the Eurozone at additional 0.3% on the quarterly GDP, which is quite decent. I'm going to tell you that. And the manufacturing PMI and service PMI also seems to be boosting up. I mean, that's cool, right? We also have the inflationary data also seems to be deteriorating. Retail sales came down a little bit by negative 0.1%, which is quite not good, all right? But the CPI and PPI are decently remaining the same. That is crazy, considering what ECB had done to the interest rate. It is wild. If dollar can get something like this, I'm talking about having to see Fed cut rate drastically, like for 7 to 8 times consistently, pam, cutting rate. And we still have inflation reducing, reducing all along the way. That would be like Jerome Powell dream. That would be a legacy that he would love to leave behind. Potentially if it gets changed from the Fed's chairman. But I think Lagarde has done it. She did it. And that was very amazing for the euro. And we saw that on the price, on the technical part of euro US dollar. You can see right here, we saw euro dollar just crazily going up. And right here, it is very close to hitting the 2020 high right here. Okay. You and I wouldn't agree. We would probably couldn't agree on the fact that this is very possible, considering where it's coming from. Okay, in 2022, thereabout, it went, 2022 and 2023, it went into a very, very crazy range after a mad drop from 2021 all the way to September 2022. Okay, this is a very crazy drop. And after that, for like a whole year straight, it ranged. And now in 2025, it's going back up. This is a pure testament to price action, Wyckoff's theory. That's why trading is not that complicated, guys. Euro dollar is just doing the normal accumulation, right? Ascending, or bullish momentum, or maybe some people will call it a bullish markup, or maybe a bullish build up. There's so many words you can use for it. But we have accumulation, we have what? We have advancement, then we have distribution right at the top, and then we have what? We have a decline. Simple stuff. The market will accumulate, then it will do what? It will distribute. Then what? We have accumulation again at the top, and then we do what? It will distribute again. All right. The distribution can be to the upside or to the downside, but there will definitely be an accumulation somewhere. And whether you're on 30-minute time frame, or the 1 hour time frame, or the 2-minute time frame, or the 10 seconds time frame, there will be an accumulation. There will be a distribution. Now, the distribution can be to the upside or to the downside. That's why I said it can be a backup or a markdown. All right, but it's still distributing. Okay, so we have this. The market is just a very dicey momentum. The same thing is happening to Bitcoin. Sorry, I'm kind of like digressing right here, but you can see Bitcoin also accumulation, distribution, markup, markdown. It is just the show. All right. Now, what do you see Bitcoin doing right here at the top again? It is what? It's more like an accumulation. Who knows? Maybe it's going to mark up again, probably to 140K, then do what? Range again at the top, and then crash all the way back to maybe 90K. And what happened there again for another 2 or 1 year? The market will accumulate again. And then what happened afterwards? Maybe mark up again. Boof. It is just the simple stuff that happens in the market. It doesn't have to be complicated, especially if you're a trader. If you're an analyst, then you have to go deeper into something that is more sinister than just what I just explained to you, accumulation, distribution. No, that's not everything that happens in the market. But in an insight, if you take a very simple look at the market, you see that everything is just accumulating and distributing. Okay, it can either be up to the upside or to the downside, but there will be an accumulation, there will be a distribution. It has to be even in that way for the market to remain sane to every traders. All right. So heading back to Eurozone, we saw what happened to euro dollar. Euro dollar is actually quite more like on a bull run right now. You can just call it bull run, and it's been very crazy. Just keep pumping. So on Eurozone, on the economic heat map, everything looks very tight. The only thing they don't have right now is the unemployment rate, which is still very high. Okay, if one way or the other they can find this one around 4.5%, I mean, this will likely be the perfect economy in my personal opinion. All right, if they can find or get their unemployment rate all the way down to 4.5, 4.2%, or like dollar, like the NZD, I mean, the likes of dollar, Aussie, Swedes, if they can get it down or anything below 4.5, would be like a perfect economy in my own personal opinion. All right, but let's see how that goes. The United Kingdom economic heat map as well. This one is getting smack in the face every single time. All right. Although they also have a very good service PMI right here, which is at 52.8. The July manufacturing PMI doesn't really look like anything decent has happened to the manufacturing sector in the United Kingdom. Also, the monthly GDP doesn't look good. Okay, it doesn't look good. It seems to be deteriorating from 0.2%. Then the market forecasted negative 0.1%. And what happened is that we actually got what? We actually got 0.3%, which is very, very. Now, taking a look at the inflationary data, we have the retail sales month for month, we have the CPI, and then we have the PPI. If we look at it, it's not looking very good. Okay, we have CPI here and here at 3.4%. This seems to be the only one that with this particular number of CPI, this particular value of the CPI, is crazy. And the retail sales also came down very drastically from 1.2%. Excuse me, guys. Apologies for that. From 1.2% all the way down to negative 2.7%. That is madly crazy. However, the PPI seems to be quite good. Okay, and probably that's why we still have a manufacturing PMI that is still pretty much unchanged in the United Kingdom, right here at 47.7. However, in the labor data, on the labor aspect of the economy in the United Kingdom, we see that the unemployment rate is 4.6, which is still averagely normal, okay, and pretty decent in my own opinion. But the employment change is deteriorating. Okay, it's going down. Possibly that's why we have retail sales, because when people are not getting employed, definitely nobody is going to make any sales. Okay, when people are losing their job, they're not being superly employed. I mean, where would they get the money to buy stuff? Okay, and in a country that is more into human resources, when you actually have to invest human beings, you have to pay tax, they need to be employed for the economy to be strong. Because there's little to no natural resources in the United Kingdom. They don't have any oil. All right, I'm not sure they have gold in the United Kingdom as a country itself. All right, I'm not sure they really have that much gold like that, like where they can mine gold. That's what I'm saying. There's no serious natural resources. Okay, however, they have to use taxis. It's more like human resources over there. So just bringing everything down to our understanding, so we know how these things kind of work. Okay, so that's why we have 40%. So they need a very serious employment rate. They need employment change, and inflation has to be coming down crazily in a country of 65 million people, plus or minus. Okay, I mean, you need a very decent inflation and unemployment rate for the economy to remain quite strong. And I heard that the Bank of England is also planning. There's one or two things about the way they settle their taxes and the way they settle their debts and everything like that. It's quite dicey there. So this is not looking very good. I hope they figure something out soon. If not, probably pound NZD that I'm looking to short to probably get into that entry that I'll just sell it and everything will make sense for me. All right. So moving on to the Japanese yen economic heat map. Right here we have a very good economy in Japan. Take a look at this. All right, from 0.6 on the quarterly GDP, we have the market was forecasting a negative 0.2%, and you see that they beat it. Okay, it was being beat, and we have a no robust or decline economy value, which is 0%. And that is a whooping 0.2 plus 0.2% from what the market was actually forecasting for the Japanese yen. Okay, for Japan, literally, the GDP in Japan, which is quite good. We have the manufacturing PMI and the service PMI also pretty looking, I mean, they're looking very decent right now. The last time the service PMI was released, it was like a year ago, right? July 24, 2024. That is crazy. But then let's focus on the manufacturing PMI right here, which is June 30th, which is the last week. Right here, we have around 50.1, okay, on the manufacturing PMI. It is not good because it dropped by 0.3, but then from where we are standing on the actual value that makes this manufacturing and service PMI make sense, it makes absolute sense. Because it's still above 50, that's very good. But when you look at the inflation data, inflationary data in Japan, the retail sales year on year actually came quite low, which is 2.2. I mean, it's still 2.2, which is still very good. It's even much better than the likes of the United Kingdom and Europe that we've checked earlier, all right? Because they had a whooping negative 2.2 and maybe negative 0.3% respectively, which is not very good. And then the CPI year on year and PPI year on year, the inflationary data, okay, the actual inflationary data are quite not good for Japanese yen right now, okay? It keeps going up. But then this is exactly what Bank of Japan needs for them to hike rate moving forward. I don't know when they're going to start hiking rate because it's not looking very good right now. 3.5 and 3.2 for the CPI and PPI respectively is not looking very good. Although they have a very good labor data, okay? I mean, they've always had it, okay? Unemployment rate at 2.5, superb. It's overeating in my opinion. It's too cool, okay? It's too cool, so, which is very good. And we have 330,000 people getting employed. That is crazy. That is crazy. So we have Japanese labor data looking very good. So that, I mean, you can't blame why we have their stock at 62.5% strength and their currency at 50% neutral reading, which is very good. So on the economic heat map front, I think we are looking very good for Japan and the dollar. They're both looking very good. So that's somehow kind of like covered more like everything that I have. Okay, now looking at the top setup on Edge Finder right here, you can see we have Euro dollar still pretty strong. Okay, still very bullish right here at score of 7. We have DAX, which is what? Which is Euro stock. Okay, I'm talking about Eurozone stock. And we talked about it. Okay, it's very strong right now. Euro is actually very, very strong. So their stock market is also very strong. As a matter of fact, I'm very sure Nikkei, the Japanese yen stock market is also very strong. Okay, also very bullish because we saw it right here. We have the stock at 62.5. If we take a look at Eurozone, I would like to see their stock market value. Okay, is it the same as the currency? Also 66.7. Also not very bad at all. Okay, it's also not very bad at all. So right here, we have CHF-JPY. This one is way too high for me to even touch at all. I'm never going to touch CHF-JPY. Eurocard doesn't look good for me to buy because of the plan I had on it some time ago. I'm still going to share it with you, but it doesn't look good. Euro Aussie, I just don't like this one. I don't know why I'm not buying it. It looks good. I just don't like it. Euro GBP, I'm looking forward to buy this one. It's one of my trade recommendations, which I'll be sharing with you later. NZD dollar, yes, I'm interested in buying this one come this week if I get a very good setup on it. S&P 500, I'm already in US 30. However, I have something on Nasdaq. As time goes on, I will share that with you. You can see Nasdaq right here is also bullish at score of 8, which is very good for me. So I'll share something I have on Nasdaq with you. It's one of my trade recommendations. Don't forget, I'm currently buying US 30, which is Dow Jones, which is very good. Also, we have Dow just below NZD dollar, score of 6, also pretty bullish, which is another reason why I'm still holding on to that pair. And to that asset, literally. We have NZD yen, we have NZD card, we have Euro yen, all of them really bullish. Okay, score of 5, 5, and 6 respectively. We have USD ZAR bearish, score of 95. I'm not really a big fan of USD ZAR, so I'm not going to touch that. CAD CHF bearish, -5. USD yen, dollar yen bearish, -5. I have a little bit of a pain on the yen, on dollar yen, which is quite bearish. All right, or let's say neutral to bearish. But right now, I don't really have any serious plan on it. I'm still going to share with you one of my trade recommendations, especially if you're a day trader. I want to give it a shot. Aussie Swiss, Pound Swiss, Pound Kiwi, all of them reading -8, -8, -9, bearish. Okay, I have a little bit of a pain on Aussie Swiss. I took Pound Swiss some time ago, which I kind of closed earlier because it was ranging, and I closed the trade so I could have. Let me actually show you that trade right, Pound CHF right here. All right. So this pound CHF was a trade I took, and I also shared with some of my friends. When I say my friend, I'm talking about my students. Okay, I shared with them. This pound CHF is very, very good. Okay, I took a shot right here, and I closed it somewhere around here because it was ranging for forever, for like a week, for like 3 weeks. It was ranging. All right, I closed it. It was a profitable trade which I closed right here, but then I just neglected it and I took my eyes off because I had to leave this trade in order for me to join the US 30 trade that I ended up taking that is doing very well right now. Okay, because I had to free my margin. You understand what I'm saying? So, do I feel bad? Maybe I should have never closed it. Still open US 30, but maybe I shouldn't have entered US and Cardian because Cardian is quite crazy right now. It's just moving around. All right, but overall, everything's looking good. So that's that. Okay, so I'm happy for that. And lastly, USDCHF also very bearish. Okay, very bearish score of -9 USDCHF right here. I'm never going to touch USDCHF. It's too bearish for me to even touch. All right, but USD card was a much better one that I took last week, and I closed some very decent profit already. So I'm done with that one. So now let's take a look at the. I talked about the XY, which is very good. Now let's talk about my open positions, and I'm just going to flip through my trade recommendation, and that'll be all for today. Yeah, this video was meant to be an economic thing. It was more like economic data video where we just talk about economy, because this is going to be a long one. All right, so US 30 is still very good. My trading stop is right below here because let me take you to my entry plan, which is the 4-hour chart. Right here on 4-hour, you can see that we have a little bit of what? A demand zone right here. If I take it to 1 hour time frame, that demand zone will look much better than what we have there. So let's take it to 1 hour time frame. Yeah, you see what we have there, right? We have a much decent demand zone right here because the market just torpedoed to the upside right there. We have another one here. We have another one here. We have something like that here. Then we have one right there. Okay, which is where I actually joined the trade in the first place. Okay, so that's where my trading stop is right now, around this region. So if the market ends up coming back down here, I'll get tapped out in a very decent profit, and I will still look. I mean, it's going to be like a 2.5% profit because on this trade, on a single trade, I mean, on an account, I was risking $15, and this particular trade is now running on like $45 profit. All right. At some point, it got to like $55, $50, and then right now with this pullback, we're seeing at 43, 42. So if you close me out right here, it's going to be like $40 profit, which is roughly around 2.5%, which is still very good for me in a way. Okay, so that is that on that one. So let's head back to the plan, the earlier plan, which was the 4-hour time frame, and when everything still looks very good. All right, good. So let me go back to the 4-hour time frame. Excuse me. So we also have a trade of CAD JPY. CAD JPY looks very good, but I take a buy. A buy looks very good. It's doing very well up on the time that it stopped doing very well. All right, up until the time that it stopped doing very well. Let me take it back to the 1 hour time frame, please. This is looking very weird to me. Okay, so took a buy right here. It was doing very well. Stopped doing very well. It started doing very well last week Thursday. And on Friday, it just went back straight. It just went straight back down. I'm still holding on to this one, although it's no more recommended. It's no more part of the top setup on Edge Finder, but the technical story still looks very good. Higher high, higher low, higher high, higher low. Maybe we're gonna get a fresh new high above this region. I'm not sure. I don't know. I would like to see how it goes. But when you look at the economy itself, the economic surprise meter, CAD is not looking very good anymore. All right, 70%, against 50%. I don't know. But the technical story still is good. So I figure let me hold on to it. The trade is on a very, very tiny drawdown. I mean profit, excuse me. But it still looks good in my opinion. Still looks very good. Very, very. So I'm gonna leave it alone for now. Let's see how it goes. All right. We have NZD also in a very small profit also. A very small profit. But I'm gonna leave it alone. See how it goes. The technical story still looks good here too. And I mean, the fundamental also is much better on NZD because 75% for NZD and 50% for Japanese. So that is still very much good. It looks much better to me. We have USD card also. USD card right here, bearish. I think I was already out of this trade when I saw the NFP last week. I think I closed this trade somewhere around here, which was much better. It was pretty decent. I'm gonna give it that, but it was an impulsive close, so it's pretty decent. I'm just gonna give it that. All right. WTI, I'm still holding a buy on this one. It's been a very crazy one. Okay, it's been a very crazy one. But my buy trade, my bullish bias is still there. Okay, we're gonna see how it goes. If it stays above this region, in my opinion, WTI, US oil is still very bullish. Anything that makes it cross below here, yeah, I'll probably change my bias. We had some last week. We read that OPEC is planning to increase get on board with the Trump plan about the pump baby pump. Okay, so they're planning to also increase their supply chain, which is quite decent for them because they're gonna make some money, so much money. But at the end of the day, is it gonna be very good for my trade? Probably not, because when you have a crazy supply, yeah, the price is gonna go down, which is exactly what Trump wanted, and what some guys, OPEC guys, really OPEC country will really love, because it's gonna generate a lot of profit for them too. Well, let's just see how it goes in general. Okay, let's see how it goes. But for now, that's where I stand. Those are my trades. Those are my open positions. Okay, I'm not in a hurry to close any of them, especially except the one I've already closed, which is USD card, which I'll be looking in one of my top trade recommendation right here. I'll be looking to add one or two to my current open position on them. So the first trade recommendation will be USD All right, on Edge Finder right here, we saw that USD is being recommended, okay, as a bearish trade, and I have no issue with that. Number one, we have a very weak DXY. We have a very, very weak dollar index, which is number one. Number two, Japanese yen is also not very bullish. Okay, it's also not very bullish. So that is also part of it. But when you look at the economic disparities between both countries, I would say I would still go for the Japanese yen, because they have a very stronger inflationary data. Their economy seems to be very stable. The manufacturing PMI, the service data looks very stable. And then we also have a little bit a better job data. Now, on the dollar too, they have a good job data, but the inflation is slowing down. Good for the economy, but not good for the currency. And then we have the GDP, the manufacturing PMI, all of them are looking very skewed. Okay, they're pretty weak. Okay, in the United States, okay, it's very weak because it's below 50. So I'm gonna give it that. So I'll probably lean towards bullish yen and bearish dollar. And don't forget what I also said on DXY earlier today. Okay, I said that DXY staying below this region right here, this particular region, okay, staying below here is weak for me. Is bearish for me. Bearish, bearish, bearish. That's what it screams. For me to be very strong on the DXY as a trader, okay, I need to see this particular move. All right, this particular move. Okay, for me to be very strong. Okay, this is where dollar will probably gain all my trust. Okay, above this region, above this 100 region. Yeah, it's gonna gain all my trust right there. But if it breaks above that trend line, and possibly we're getting it around this region, I'm still gonna be like, US dollar, what do you want to do? US dollar, that's what I'm gonna say. But if it breaks above here, pull back, then I'll be like, yeah, let's go. Let's go. So that's gonna be my plan on the dollar. That's how I'm gonna approach the dollar moving forward. But on US dollar, Japanese yen, for now, I will lean bearish. Okay, I will lean bearish on a shorter time frame, maybe like 30 minutes scalping strategy. I'll probably be shorting the dollar. All right, potentially, maybe when it gets to this top, I'll sell it again, because when you look at it on the 1 hour time frame, 30-minute time frame, it's all fully bearish right there. All right, and also on the 4-hour time frame, it's pretty bearish too. Yeah, it's also pretty bearish, but the bearish that is ranging right now, you can see it's pretty bearish. We have lower, low, lower, high, lower, low, lower, high, and then the market just went crazy at the bottom here. So it's a very dicey one. I'll probably look for short opportunity moving forward, but let's see how the dollar reacts next week. So that's number one. On gold, gold looks very interesting. Okay, very good to look for buy opportunity right now. It has broken this particular trend line to the downside, which is something that I personally take a big part of. I shorted this one. Now, if you want to take a buy on gold, we have a demand zone right here. I mean, the demand zone right here that got mitigated right here. So that one was already, this has been turned to, a support region right now. Potentially, maybe we'll get market coming down to this region right here. Maybe we're going to get a fly to the upside. Because on a smaller time frame, when you take this chart to maybe 30 to 1 hour time frame, this is going to look like head and shoulder pattern. All right. So you don't want to take a look. You want to jump into a buy right immediately. Or if you're not in the trade yet, okay, you don't want to probably rush into this. So you might want to chill a little bit, see if you can get a push to the downside right here. That will give you a better opportunity to take a cheaper buy on gold moving forward. However, if you are just like an impulsive trader, just want to buy right there, okay, just want to take a buy, my advice would be that you wait for this particular top to be taken out, at least first off. If you wait for that particular region right there to be taken out, something like this, a break above this region, a pull back, then you can go all the way up on it. All right, we have the Morgan Freeman. I said Morgan Freeman, you can imagine that. Okay, we have the JP Morgan, we have the And we have this Chase guy too. Okay, we have the Morgan, we have the Chase. All of them forecasting 4,000, anything above 35 for gold at the end of the year. All right, so we might get a crazy all-time high on gold, but right now there's no bearish bias of the gold right now. Nothing looks bearish on the long term for gold right now. Okay, nothing looks bearish on gold right now on the long term, on the higher band. I'm talking about that. So if you look at the 30 minutes, 1 hour, you might be seeing some bearish trade that might look very good to you. I want to look into that. But on the long term, from 4 hour all the way to the upside, it's all bullish in my personal opinion. So that is that on gold for me. Okay, take a very good look. If you're looking to buy, which is something I would recommend, okay, wait for the market to come back to this region, buy above there. The second region to buy is there, and above this region, and buy right there. You see that you buy at 3,300 or you buy at 3,360. All right, those are the two regions for me to advise. That I would advise for you to look into buying gold. Don't forget, this is not a what? It's not a financial advice. Euro USD, Euro dollar is crazily high. All right, which is something we've discussed earlier. On my personal opinion, in my personal opinion, I would say you look for buy. Just wait for the pullback. All right, just wait for the pullback. Euro is very strong. The Eurozone currency is very strong. So let's take a look at this pullback and take a look at this buy. So if you are a short-term trader, maybe a scalper, all right, maybe a day trader, and you're looking to short Euro, yeah, because I would also be looking into that come this week, but a more smaller time frame. And all of those trade setup will be shared in my Signal group and on my free Telegram channel as well. So I would potentially wouldn't advise or would love to see this eye getting mitigated or even getting broken in the list. Okay, so this particular region, map out this eye. That would be like on the 26th eye, maybe last week high, and this the upper week high and the last week low. These are the two eyes you want to map out. Okay, and then wait for this particular last week eye to be broken to the downside. Wait for pullback and go short. Okay, it could happen maybe on Monday or Tuesday. So you might want to look into now short-term set. If you want to counter that trade, map out this particular high and low. Wait for the market to break below that region. Wait for pullback. The breakout might not be this heavy anyway, so wait for pullback on the 31 hour 15 minute time frame and anticipate for a short. That would give you something like this, a bearish trend. All right. So once the market gets to this region, now it's up to you. Do you want to keep dragging it to the downside, or you want to take your profit and wait for maybe a buy opportunity moving forward? That would be your business moving forward. But for me, if you want to buy, wait for the buy at this particular region. If you want to sell, map out like this, break, pullback, short. Simple stuff. That would be my plan if I was you. NZD dollar, what do we have right there on Kiwi dollar? Like I said again, on Kiwi dollar, which is exactly what we analyzed last week, this is going to be two regions for me to look for buy on Kiwi, right here and right here. Market break below this region decisively, decently, it's going to be very good because we are going to get a 50% to 61.8% Fibonacci pullback, and then we go bananas on that. Okay, we go bullish on Kiwi dollar, because don't forget DXY is still very weak. Unless we get a very, very good change, I mean a spiral push on the DXY, I'm still very bearish on the dollar for now. So I'm just gonna wait for a buy opportunity, very good buy opportunity on NZD, and I will take a buy all the way to the upside. Where is gonna be my target? If I'm gonna buy, I'm gonna long Kiwi, it's gonna be right here. This 2023 eye right here. All right, that's gonna be my buy. But I need this pullback. I need this gap being mitigated like so badly. Right? I need this gap. I need it. All right, this demand zone right here needs to be what? Needs to be mitigated. Excuse me, I was gonna drag it down. This demand zone right here, yeah, I need it so bad. Okay, I need it to be mitigated. However, if it failed to be mitigated, excuse me, let me instead double this. Okay, let me instead double this one. Yeah, I think this one is much better. So if it failed to get mitigated, don't forget the first plan on NZD dollar is what? Come back to this 50% Fibonacci. That is if this particular region is never going to get mitigated, this demand zone right here. However, if it's going to come down here to get mitigated, yes, why not? I'm going to buy NZD from that region. So the last part is this top right here. You must have different plans, different regions. This is NZD dollar. It's not a crazy pair. It's not the kind of pair that will drop and will blow you up, unless you're using 1,000 lot size on it, okay, or the $500, okay. It's a very slow pair, very decent, quite easy. All those pairs are very easy. They don't really have much problem. Yeah, NZD dollar is one of them. So if I take a buy right here and the market deep, I'm not gonna fret. Genuinely, I will just take another buy right here because On the long term, yeah, I'm quite bullish on NZD dollar, genuinely. Okay, so because it's the only one that doesn't be very crazy compared to pound, dollar, and euro dollar. So I'm I'm quite decent on this one, and I'll be looking to buy NZD, USD. Well, for sure, it's gonna be right at the bottom here, or yeah, possibly here. I'm gonna target this top right here. That's on my plan, NZD, USD. So lastly, on Bitcoin, second to the last, excuse me. So Bitcoin right there, again, ranging, no full plan yet. Okay, I'm not sure I'm going to be buying gold, Bitcoin anytime soon, unless I'm trying to trade it on a 30-minute time frame, which I don't really have open right now. I would have shared one or two with you, but if I try to open it now, it's going to take probably like a minute or two, which I don't have. This video is already long enough, so I'm just going to leave it like that. But for Bitcoin, I would say right at the top there, let me see if I can make something happen right here. Let's see if we can make something quite decent happen on a shorter time frame, which I'm currently buying Bitcoin. Don't get me wrong. I started buying right here because from here to here is like 61.8% Fibonacci, which is good. So there's a high possibility of just getting, the all-time high getting retested, that 112K region. Yeah, you can get it retested. However, is it gonna happen right now? I'm not sure. When is that gonna happen? I don't know. But we have to see how it goes. But overall, Bitcoin still looks very bullish. You can see the moving average crossover, everything still supports this bullish momentum. So let's just see how this goes. Maybe we're going to get 120K this time around when this particular high is broken. I don't know. I'm not sure. But we shall see. That's just everything I have on Bitcoin right now is I don't know. I'm not sure. But what you can take on is that I am still very bullish on BTC. I think that's enough. Lastly, on Nasdaq, I have some region I would love to see pull back on, some very nice demand zone. Okay, if I get those zones retested, let's take it to the daily time frame. Excuse me. The daily band will make absolute sense. So on Nasdaq, right here we have some very good region to anticipate a buy demand order from. Okay, right here we have a little bit of demand zone right there. We also have a demand zone right here, and right here we have a key zone. Okay, because previously we have what? This is a resistance. It was broken right here, and since then the market is yet to come back to this region for nothing. Okay, now I'm not gonna sit here and tell you that yeah, the market is gonna come back there to come and retest it. I'm not sure. Okay, but we have to take a look at the market as it builds up. We have a demand zone right here, we have a demand zone right here, and then we have a key zone right here. So the first region I'll be targeting for a pullback is right there. If I get a pushback, if I get this 3-wave retracement, I will get a push to the upside right there. I will look to buy. That's my first region to buy. After this 3-wave pattern, okay, for sure, why not? The second region will be right around there, and the third region will be right around there. That's what I have with Nasdaq. Okay, the 3-wave pattern to the downside, look for buy opportunity. If you get an entry setup right here, entry setup in the form of a candlestick pattern and engulfing candlesticks on the 4-hour time frame with a confluence of moving averages. Okay, when the moving average kind of like when they all line up very well around this region, then you can look for buy opportunity. When the market ends up breaking, making a very deeper move to the downside right here to this leg, yeah, why not take a much cheaper buy? Okay, make a much cheaper buy. Okay. Take a much cheaper buy right there. Okay, it's gonna be very cool. And for adventure, the market actually deep further to this region. Why not take a buy there again? It all looks very good. It all looks very decent. Okay, nothing too complicated on this one. Just chill and wait for the buy. And when we now plot our Fibonacci, I'll start from this bottom right here because I don't really see any serious pullback anyways. Okay, Fibonacci right there, you see that right in this region, excuse me, we have what? We have 50%. This particular place, which is our what? Our key zone. Okay. Now, if I want to be very cool, I want to be a good analyst, and I bring out all the rest of the show, which is 38.2 and 28.3. You can see where they all fall. So that means you must know that these are pivot point area. These are places where orders will be seated. 23.6, 38.2, and 50%. Those 3 regions are very important on Nasdaq. So take a look at them. Okay. Those are buy areas, buy region. So you might want to be very calculated because you don't want to take a buy right there and the market did what? The market did further and you're holding it back. Okay. If you're not a DCA trader, you might have to cut that loss, take a new buy here, and the market will drop further. Cut this loss, take a new buy here, and maybe that one will be the one that will fly up. But we know that there is like 75% chance that we might never see Nasdaq back at this particular region anymore. Okay, especially not after it did maybe another plus 10% after it has broken this all-time high, and then we can now see a much deeper pullback afterwards. So we all know that. For now, the Nasdaq, S&P 500, and Dow Jones, they are on their way to the moon. So pay close attention to all of these guys. I will see you in the next one. Have a fabulous day ahead. I will see you. Don't get margin call. Don't forget to subscribe to my YouTube channel. Don't forget to follow me on all my social media pages. All right. The full videos of this is on YouTube, so don't forget to check it out as well. I'll see you in the next one. Have a good day. Bye for now.